Good afternoon, everyone. Yeah, I know. Bitcoin's at 57K. There's a lot to get into today. It's just me, so let's start it off going live with Money Never Sleeps. Welcome back to Money Never Sleeps. Yeah, I'm glad to be back. It's the first episode of the week. Should be joined tomorrow with House, and J-Web should be back at some point soon. But I'm glad to be here with everyone. Randy, it's always good to see you. Thanks for being in the chat. Leroy Jenks, yes, I know, man. It's at 57K. Doesn't want to give up, does it? All right. Yeah, I know. It is what it is. It's not you can say about it. I'm not gonna tear Bitcoin down at all. I'll point out some things that I think are still problematic with Bitcoin, and again, I think it's kind of indicative of the broader market where we can see what's actually kind of going on. But for the most part, my stance hasn't changed. I'm still the resident bear on this channel, and I think that we're probably going to be seeing lows if Bitcoin can do this still. Ace, thank you for being here as well. Haven't seen you in a while. It's good to see you, man. But yeah, I know it's 57K Bitcoin. Let's just take a look at the charts right now and see what's going on there because, yeah, I mean, we just see exactly what's happened. So let me remove some of the stuff here and then we'll look at some of the technicals and everything. But we're just looking at this on the daily, right? Bitcoin ETF was back here in January of 2024. You can see that we had a pretty good pullback at first. It was at 18% or so. Coming back here, even more, it's about 21% or so that we pulled back for Bitcoin. So it was a really good move, right? Obviously, since then, we could see this run up here. And we're up about 49%, which is pretty, I mean, it's pretty hilarious when you look at it like that. Now, I'm just going to get into this right here. Some of the technical stuff. And again, I think technicals are very stupid here. And, me being 100% a technical analyst, I think I'm looking more for what's happening in the broader economy and how it's going to impact the price of Bitcoin. Because again, we have not seen Bitcoin in a true recession. Last true recession that we had was back in 2008, 2009, 2010. But we haven't seen a true one like that where, unemployment's above 5 to 7%. We haven't seen, credit tightening to the level that we are seeing right now. So I'm really unsure if Bitcoin's going to react as normal equities would. I would imagine they would now that there is a lot of money piling into Bitcoin. But at the same time, I think that there are some technical things that we have to keep in mind when we're looking at this. So let's pull up the volume. And I have some problems with the volume right here. First off, we talk about bearish divergence quite a bit. I'm going to zoom in so we can kind of see it. So what we would like to see with bearish divergence is the price is going up while the volumes are going down, as opposed to the price going down while the volumes are going up. So it's really interesting to see that because if the volumes are going up while the price is going down, probably tells us we're going to see a bit of a pop in the price, right? Now, what we've seen since January of 2023 is the volumes are going down, but the price is going up. That doesn't make a lot of sense, right? It means that there's not a lot of people buying and selling. However, the price is going up. There's a couple of things that could be. One thing, obviously, I've been bitching about for the longest, and yes, I nag about them a lot. But we talk about the exchanges and Tether and all the the exchange coordination that we've seen. I was bearish on Binance for all of 2023, and I saw the fact that they were doing a lot of things that were very questionable. Now, I do know that they weren't the only exchange. I'm not going to say name other exchanges, but you can pretty much understand that it's manipulation to the extent of stable coins, which artificially pushes the price up. Now, there is another way you can manipulate the market, and I don't necessarily know if they're doing this, but we talk about outflows a lot. Or at least on Twitter, we talk about outflows often. And that's pretty much meaning that people are moving their coins off the exchange. What that does is it causes kind of like a bottleneck, a funnel where we're not getting enough supply onto the exchange and no one's necessarily selling. Now, who can do that? Any of us can do that, but also the exchanges can do that as well. So I have a funny feeling that there is a lot of these exchanges that are pulling some supply off the exchange and they're holding it in some type of cold wallet. It's very deceptive because obviously the price is shooting up, but like I said, look at the volumes going down as the price is going up, and this is a big deviation, if you ask me, right? I mean, it comes up a little bit here. Maybe people FOMO buying it, what could be the top, but that's a huge. I mean, this is down here. I can't get rid of this, but you can see that the volumes are dropping significantly. Price doing the exact opposite. That is huge bearish divergence. So I'm not completely sold on that. Then we look at the stochastic RSIs, right? Obviously, in the daily, there's a little bit more room to run up. I'm okay with that. I think that we are probably going to see this correct fairly soon to the upside, to, getting close to that overbought territory. We're also hitting the top of this parallel channel, and this is one that's, it's not necessarily most clean. However, it is a parallel channel nonetheless. We'll see how that plays out, but let's go into some of the bigger time frames. So let's look at the 3-day. 3-day time frame, you can see very similar to what we were seeing on the 1-day. Volumes are going down, price going up. Stochastic RSI is extremely overbought. Go down even further on the weekly. Stochastic RSI almost completely overbought, so we should be overbought by the end of this week. Hitting the top of this channel, volumes are decreasing. Right. Let's go to the monthly. 100 and 100 is the most overbought that Bitcoin's ever been. On the stochastic RSI, and we're not at all-time highs, which is really interesting, right? You can see that there is also, not just from here now, but if we pull this down here, we're getting bearish divergence from November 2022, which would have been FTX, all the way up to where we are currently, and the volumes are nowhere near the levels that we saw back then. Obviously, there was a lot of sell-off pressure back then. However, you would think that with the rally that's gone up this much so far, you would have thought that a lot of money would be coming in, right? So it's really interesting to see some of this stuff. And I can even be more of an ass, and I will today because I have no JWhip and no house to stop me. But if we look at this here, let's get rid of the volumes. Pull the stochastic RSI. On the monthly, we can see that when Bitcoin ever hits 100 and 100, which we see here back in the Coinbase IPO, right around there, is at 100 and 100 on stochastic RSI. Roughly close to it back here in July of 2019. We had a couple months of red. Back here in December of 2017, where before we saw the top of the market. And currently right now, these are the only times we've seen 100 and 100 on the stochastic RSI, right? So it's really interesting to see that even, back here too, which is, 2016, there was a sell-off back then as well. So to see that and where we are currently, and then we also look at some of these other fundamental things. Futures, when that was launched, that was at 100 and 100. Coinbase IPO was, 100 and 100. Bitcoin futures ETF is at the top of the market. And then, so I'm not necessarily concerned with that stochastic RSI reading on the monthly. And then right here, we're at 100 and 100, and we're pretty much at the spot Bitcoin ETF timestamp where we are in the market. So there's a lot of things that are going on, right? And the price continues to push up. However, the volumes aren't necessarily there to support it. So I don't buy that one bit that we're seeing a lot of retail come in. Maybe they are, but they're coming in arguably a pretty shitty time, if you ask me, because the time to be buying probably was when the volumes were extremely high, unfortunately. And, it was down red. It was down here, but it's kind of a fake out because now you're seeing the volumes pick up extremely high when everyone was selling, but as they're going up, the volumes aren't following with it. And this is now the 3-month. And if I want to be the biggest ass in the world, I can go to 6 months. You can see that the volumes are still nowhere near where they were back in the mania. And if you want to go to the 12-month, yeah, it's even worse, right? And you have to ask yourself, well, the price is up where it is right now. Why aren't people buying in? Why aren't we getting organic volume coming in? Well, part of it is that retail can't afford Bitcoin at the current levels. People aren't necessarily buying into this shit. Maybe they are. Maybe you're seeing people talk about it, and some people have money for it. But for the most part, to sustain a move to the upside, this isn't necessarily the most bullish of situations. There's a lot more money during the pandemic. A lot more people were pushing, money in. I started with Bitcoin today because I wanted to talk about how this leads to the banking sector and how we could see a bond market squeeze. But for the most part, that's kind of the technical setup for why this doesn't seem like it's going to make a lot of sense for this to keep pushing up. Could it push up to all-time highs? 100%. But at some point, let me just remove this here. Looking at the Bollinger Bands, you can see that we even hit the top of the Bollinger Bands. Whenever we hit the Bollinger Bands as well, there's a good chance that we do see an explosive move to the upside or the downside. Now, I'm thinking that we haven't tested this bottom one in a long time, right? It seems like we're getting caught up here. I'd probably anticipate that it's going to move to the downside just because of some other things we're going to show in the show. But for right now, is it possible that we could go to all-time highs? Yes. Anything is possible right here. I think there's tons of manipulation in this market. And I think there's also just a lot of things that people don't necessarily understand. And we'll talk about what's really driving a lot of what's moving this market in a second. But yes, I just wanted to show some things here. So much market manipulation going on right now. 100%. They're definitely trying to reel in retail real. Yeah, 100% Ace. It's a really tricky market to navigate, and it's almost like, do you want to short this market? I don't necessarily know if there's any strategy right now that's going to be necessarily beneficial, right? It seems illogical. It seems logic. It seems illogical to be bullish up here, but at the same time, it seems hopeless to be a bear up here, right? It's like, what a time to be alive. It's the best way I can kind of put it. It's a really hard place to decide where you want to go in either direction with this market. But let's pull up the funding rates, because last night we saw some really interesting funding rates, and this is going to tell us a little bit of where Bitcoin is probably going to go. Again, shorts to longs. Let's pull that up. Red is bad. Red means that more people are longing, right? But to an extent that's really extreme. So you can see that Bitcoin is at 0.0216 right now here on Binance, 0.02, almost 3% here, almost 4% here, 3%, over 1%. 1% is about neutral. You want to see it in white, kind of seeing how these numbers over here are white. And then green is obviously people are shorting this thing like crazy. Guys, if you're shorting Binance, good luck. Sorry. I've shorted Binance. I shorted from 347 down to 200. And that was arguably one of the most stressful things to ever sit through. Yeah, I mean, it was worked out, but at the same time, you have to understand that Binance owns most of the supply. So when you see people that are shorting this down here, it's Binance liquidating themselves or trying to entice people to short their assets. At the end of the day, they own most of the supply, so it's not hard to move that thing either way. But if we look at this here, this is extremely, extremely positive. And you don't like to see positive funding, because that means that more people are long than they are short, right? I was looking at there's a Twitter follower. We'll pull up one of his tweets in a little bit. His name is Ro Ryder. Very smart. Talks about a lot of the Tether fraud that we're seeing, or fraud that people are conducting using Tether. But he brought up a great thing when it comes to funding rates. Now, this is the 1 year, and on the annualized basis, you tend to see this at 11%. Last night, it wasn't 23%. 23.7% is extremely high for funding rates here for Bitcoin. Last night, it was 108%. Everybody was mass long on Bitcoin. There was so much money being paid to shorts. However, the price kept on pushing up, right? And the difference between the futures market and the actual spot price was so inflated to the point that, you're pretty much just creating this huge liquidity gap on the other side. So seeing this right here and seeing how positive everything is, it seems like we're at peak euphoria. And again, the problem with this too is that everyone is using leverage. They're not necessarily buying spot. And that's problematic, right? Especially with, we know how I mentioned that a lot of these exchanges are moving supply from their hot wallets, or the exchange wallets, to cold wallets. A good chance that that's 100% how we're seeing the price move up. So it's a very interesting thing right now. I don't buy this one bit. It sucks to be illogical, because obviously you could have made a lot of money being illogical and riding this up, but at the same time, this could go at any point. That's the trouble here, right? So I see a lot of people getting bullish here, 57K going for all-time highs. It could, but I'm not necessarily convinced that even if it does get to all-time highs, they're going to push to 80K, you're going to push to 100K. There's a lot of problems outside of crypto, it's a manipulated market 100%, that are going to be problematic for liquidity moving forward. So I just wanted to preface this whole show with that. There's a lot of stuff in Bitcoin that's really interesting, but I'm not necessarily sold on the fact that we're going to continue seeing this push to the upside without some type of retracement, given what the technicals are saying, without there being enough liquidity in the system. Because right now, that is a massive long leverage play that a lot of people are doing, and it doesn't seem like we're going to get to the point where there's going to be a lot more liquidity above us. We're going to have to find liquidity. It's not about pushing the price up. It's about pretty much making money. And I think right now there's a lot of money below, and it's going to be pretty nasty ride down as we take everyone who's been going long with leverage. Even 1x leverage is probably going to be a lot of problems there. So that's just one thing we had to mention. Let's go here and pull up this from a writer, which is a tweet that I saw, and it kind of talks about Coinbase too. Coinbase is going crazy today. See that someone dumped a ton of coin on open. It rallied all the way to 212, I believe. So we had a 5-way move that we're tracking with Coinbase. It's invalidated because of this move. However, as soon as it got up there, we could see that it dumped pretty substantially down to 199. This is on the 15-minute chart in the morning. So very interesting to see that. Again, tells you that it's about liquidity. It's not necessarily about pushing the price up and keeping it up there. definitely wanted the price up there, but I think the price is also just tethered with, no pun intended, it's definitely tethered with Bitcoin's price action right now. So let's pull up charts and we can take a look at some things and see what's going on there. And then I want to get into some of the more the macro stuff because that's going to be important. So let me just remove some of this. Don't need that. Don't need this. But yeah, let me pull up Coinbase's chart and we can take a look at what's going on there. Again, sticking with crypto for the most part right now, but we were charting a 5-wave move to the downside, which would have been looked like something like this. Wave 1, wave 2, massive wave 3 down here, wave 4, and then wave 5 going lower than wave 3, right? There is a problem here, though. You can't kind of see it. Let me pull this down here. Pull this up. Let me see if I can put this line right here. Yeah, I can kind of see it right here. Yeah, so let me just change this as well. Keep that there. Yep, so we can see that the bottom of wave 1, it was overlapped by, the height of wave 4. So this is invalidated. We are probably not going to see this play out unless, obviously, this is probably a different structure than we were anticipating. So what this could be now, looking at it, it's very different than the 5-wave move. It would have been nice if it was the 5-wave move. However, it's probably something more like this, which is probably going to ABC. Could still see new low. I think Coinbase still has the opportunity for putting in new lows. However, it's just not a 5-wave move to the downside. So this is more of a longer play. And if anything, this is kind of paired extremely well with Bitcoin's price action. We anticipate it to be an ABC correction for Bitcoin moving forward. So right now we're just in the B wave. Sucks to say that, but Coinbase's IPO launched in 2021, April of 2021 or so. And we know that Bitcoin peaked in November of 2021. So if we're looking at Bitcoin being an ABC corrective pattern from there, then we can kind of say that this is also a corrective pattern from the IPO down to where we're probably going to end up when Bitcoin does bottom. It's not the most fun structure, but it's just one that we have to kind of keep in mind, right? We invalidated the one, so that one's not valid anymore. We're going to keep an eye on this. So this is probably not a 3-wave move within here in ABC within this B wave. It's probably more of a WXWZ pattern. Again, just the corrective pattern that kind of leads us up here. I have a funny feeling that now that we're seeing, a bit of a sell-off here, we got, this is the move to the upside. We're probably going to see Bitcoin, if it does pull back, this one also pull back just right with it, right? So, just think about where we were also earlier in the year. We were roughly right here. I think in February, we were around $114, shot all the way up to 90. What was that? 209, so about $95 up about 82% for that. And now we're currently sitting at about 74% up for Coinbase. So there's a lot of money moving back and forth, and it's very easy to move that price back and forth. Kind of goes hand in hand with what's happening with Bitcoin, right? So just something to keep in mind there. But let's move into some of the other stuff that's going on in the world. Let's talk about this trade, one of Nancy Pelosi's biggest trades that everyone's watching right now, and she's actually doing pretty good so far, right? So we know that Palo Alto Networks, they had their earnings wasn't necessarily the greatest response to it. We saw that they dropped roughly 28% in one day. I'm pretty sure that she bought somewhere around here on the 200 EMA. Seeing that where this was around the 200 EMA, let's just say right here, to where we currently are, it's about 17.5% up. Went to about 22% yesterday once people found out about the trade. Guys, this is probably going to rip. They're not picking losers, as a great man once told me. Seems like this is probably going to be something. What could it be? Palo Alto Networks being cybersecurity? Is it a government contract? Is there something that's going to happen? Where it's going to be important for there to be, cybersecurity. So cybersecurity defense stocks maybe rally. I have no idea. All I know is she's not picking losers. It's probably not going to tank from here, right? Not until at least profit is taken on their behalf. It's kind of terrible to say that, but it just seems like the play right now. So it's something that we have to keep an eye on. But this was one that looked very similar to Super Microcomputer. Had a really bad earnings. We thought that it was going down from there. Obviously, Super Microcomputer had an even worse drop. Rallied pretty significantly, but again, we can see that it's down on the day. It's down 3.29%. But a lot of these stocks that are out there, It's a very volatile swings right now. It's not necessarily something that it can be sustained. I think at some point the bubble is going to pop, and I think that bubble does come down to what's going on in the banks. Let's talk about that right now because that's really interesting as well. Just going through a bunch of stuff right now. Let me pull up something that we are talking about called, you know what, let's do this. Let's talk about Japan right now and the dollar, because that's going to be just as important as talking about anything else that's going on, because it's all interconnected. We are in a global recession that is 100% synchronized. And when one person makes a move, everyone's going to be forced to make their move, right? So the dollar, we're looking at that right now. It's had a really good run since January. We were bullish on the dollar to start the year, pushed up. The thing that's really interesting here is that we're about to get a golden cross. We were about to get a golden cross, and we're still very likely to get it. We're above the 200 EMA. We just got to continue to get closes above it. This is kind of a parallel channel. It's pulling down. I think this is 100% a bull flag. Not 100%. I'm not going to say 100% because fucking PC comes back cold and cool, and this tanks, then, you know, so be it. But I think that this is a bull flag. I think that this is coiling up to the point. If you look on the stochastic RSI, we're extremely oversold, and we got to oversold very fast after being overbought for such a period of time too down here. But the reason why I think this is a problem, it's because the yen is also problematic here too, because the yen is actually losing strength to the dollar. The yen's been rising here. Obviously, more yen to one US dollar is not great. This doesn't help the people of Japan, right? This doesn't help their inflation battles either. That means that they're paying way more for the price of goods than they probably can afford, because wages are stagnant. They are not necessarily growing. We're also seeing their population decrease. Why does any of that matter? Well, it matters because the Bank of Japan is probably going to have to do something in the near-term future, right? They're going to have to do something to prevent this from blowing out of proportion, which they also did back in 1989 when the Nikkei was up at all-time highs. So we pull up the Nikkei here. You know, Nikkei is up at 239, right? And the last time we saw the Nikkei up here, obviously, like I said, it was back here in 1989. Came right up and got massively rejected. In the first 3 months, it was down 23%. Looking at here, but they were raising rates right around here. So can we push up a little bit higher? 100%. Obviously, I think that's probably the most likely scenario. But when they did raise rates, that changed the entire game, because once one country raises rates, a lot of money is pulled out of other countries. We know that there's an issue in the bond market. There is definitely a collateral shortage in the system right now. So when I take a look at what's going on in Japan, and we know that their Bank of Japan is going to have to make a decision come March 19th, which is conveniently after OPEX, tells me that there might be on the way to raising rates in Japan. That, you know, I'm pulling up this article as well that's going up. This is talking about Japan's inflation. It's coming down, but it's still higher than expectations. And it seems like the end of negative rates is in sight. I think a lot of people are expecting them to raise rates, which kind of goes in hand with the United States probably cutting rates at some point this year. You see that the core CPI in January for Japan was 2%. They were expecting a 1.8%. So it's still somewhat sticky, but December was a hot month, right? You can see that fuel slowed down to 3.5% year over year, and then they expect the markets expect the BOJ to end negative rates in March or April, which very much lines up with the biggest problem in the banking sector right now, which is the bank term funding program and the collateral shortage and the problems that are happening because the equity markets are so high. We need the bond market. We need the bond market to survive. If we don't have the bond market to survive, the government isn't going to have the easiest time spending our money. They need that to survive as well right now, right? And Janet Yellen's struggling right now with all these treasuries. But the reason I brought up the yen is a lot of money that is in Japan or from Japan that's in the United States, obviously because equities are kicking ass, might flow over there. They might start taking advantage of some positive rates. It's going to be a lot of things that change globally in terms of where people are going to be putting their money, right? But that kind of forces the hand of other people, because one country cuts their rates or another one raises it, it's going to impact the entire monetary system. The flow of capital is definitely going to change. We're definitely going to see a lot of money that's going to be parking in different places, anticipating certain events to play out. And right now, I think that our biggest concern is obviously the banking sector. There's something that's going on in the banking sector right now that a lot of people aren't talking about, but I have to bring it up. JP Morgan and Citigroup are ramping up their investments in repackaged loans. What is that? A CLO. A CLO. That sounds very familiar, right? Sounds kind of familiar to a CDO. So what is a CLO? A CLO is a collateral loan obligation. It's pretty much just pools of debt that are backing a single security. what are we talking about here, right? Commercial real estate. There's a lot of problems in the commercial real estate. We're seeing that most office buildings, their offices are vacant, and a lot of these loans that are coming due this year, next year, are going to be losses on the balance sheets of a lot of these institutions. Now, the problem is JP Morgan and Citigroup are, and I think there's one other one that they mentioned in here, Bank of America. Yeah, they are pretty much holding these things called CLOs, which is no different than a CDO, right? But you don't necessarily want to be holding that in times of economic downturn. You want to be holding the swaps on those, because if any of those go bust, and they're saying they're the top AAA, yeah, fucking, we've heard that before, that they're top AAA, doesn't mean that the underlying bonds that they're built on aren't going to go, bust, or they're not going to essentially pretty much lose value. So that's something that's really interesting here, that the top banks are exposing themselves to this. Now, do I think that the top banks are smart? Yes, I do. But I also think that it's very easy to get blinded by an equity rally, the one that we've seen to this likes, and think that everything's going to be okay. I think it's very possible for everyone to kind of buy into this. And could the indexes shoot up a little bit more? 100%. However, the economy is saying something completely different. We're seeing tons of layoffs. We're seeing a slowing growth. We're going to get the GDP revision tomorrow, so that's going to be really interesting data to look at. But we're also seeing a lot of delinquencies and a lot of defaults happening. And why is that important? Well, it kind of goes back to the bond market and the banks, that with rates being where they are, there is no creation of new debt. So all these loans that are bad, old loans, they can't be paid off with new loans. So now people are scrambling for liquidity in the system. If you cannot pay that off, what do you need? You need treasuries, right? I believe the discount window for the Fed, you have to be in good standing, and you have to have collateral on hand. If you don't have that collateral on hand, the collateral that Janet Yellen can't sell enough of, that the tail end of this is absolutely just going up higher and higher every auction bid, probably tells me that a lot of these people are not positioned well. Fidelity Management had just went all in, not all in. They definitely cut a lot of their treasury exposure, and they went into small caps. And could small caps do well here in the short term? Yes, we'll take a look at that in a second. But cutting the treasuries here seems very dangerous, especially with Japan raising rates. We expect that the Fed's probably going to cut soon. A lot of those rates on those yields are going to go down, or the yields are going to go down significantly. It doesn't seem like it's going to work out well, and especially with there being such a collateral shortage and a dollar shortage. If they cannot pay off that old debt because they don't have any new debt that they can issue to other people, and they see that there's a lot of issues with losses, I'll pull this up right now. I'm just rambling here because I have free reign today, and I love talking about the banking sector because it's so fucked. But not Bank of America, Citibank right here, we're talking about a bank that is trying to get into this $1.3 trillion industry of CLOs. Look what happened to them in Q4. Guys, how do you lose $1.8 billion in Q4? Just so you know, year over year, the difference between what they made and what they lost from Q4 2022 to Q4 2023, 173%. Negative 173% that Citibank lost. That's why we're seeing Operation Bora Bora when they're laying off tons of people. I don't think they're quite done yet. And I don't like the fact that they have those CLOs on their balance sheets. I think that's going to come to bite them in the ass at some point, whether it's this year or later. Who knows? We know that the Bank Term Funding Program obviously ending complicates a lot of things. We're also seeing the reverse repo go back towards about $500 billion. I think it's down about $10 billion today or so. Once these facilities drain, there's going to be less collateral in the system for them to borrow, and there's going to be less options for them to borrow and pay off a lot of these debts, right? The last thing that these banks need right now is there to be any type of run, and that just even exacerbates a lot of these problems. Because if there's any type of discussion that people are pulling their money out, or even worse, some of these prices of the stock are just dropping significantly, lending's just going to get worse. They're not going to lend out. They're not going to create any new debt, which also just slows the economy even worse, right? This is kind of the perfect doomsday device, the monetary system and how interconnected it is, especially now in 2024. It wasn't the same that we would have probably saw in 1989, right off the gold standard when the US dollar was pulled off of that. I think the US was probably more vulnerable than it is now. Don't get me wrong, the US is completely vulnerable to everything that's going on right now. I just think that the problem here is that we're going to see a lot of pain in other parts of the world. U.S. will probably be fine for the most part, but it ain't going to be pretty regardless. So a lot of things are going on in the world. Jenks, just a lot of research, man. Just a lot of research, reading all this shit. And again, I was telling Chris the other day, it's like I feel like the first caveman that's learned how to read, and all the other cavemen are just saying, "Nah, you're full of shit." And the reason I say that is because, again, this is the stuff that people won't want to talk about. It's very hard for me to be bullish knowing that the world economy, the global monetary system is pretty much doomed to fail. And I mean that in the nicest way. And I say doomed to fail, I mean by design. I don't think that the bank term funding program was cut off in March, or will be cut off in March, to pretty much think that the banks are going to be doing okay, right? I think the rates were at 4 point something percent back when they were in a lot of pain last year. They're at 5.31. We don't see any type of cutting in the near term future for the US, probably not until May or June, most likely June. I think that we're going to be at zero at some point by the end of this year or early next year. I think they're going to have to cut to zero because something will break in the system. It's very problematic. I just don't necessarily see them being able to fix this, right? They manufactured a problem. This will be Jerome Powell's third crisis on hands. Obviously, 2019 into 2020, we know what happened there. Last year, and now the banks are even in a worse spot. But now it's regional and larger banks, and people are just not spending any money because they don't have the fucking jobs, right? I was just driving down the street earlier today, and I saw that a lot of these retail spaces are just empty. A lot of for lease signs across the board. You can look at the data all you want. You can look at the data that's they're telling you everything's okay. You can look deeper into it. It's not necessarily the same picture. You kind of have to, I hate to say pick and choose, but you kind of have to pick and choose which data seems more feasible for what's going on in the entire market. And you have to, kind of compare and contrast what's going on from one market to the next. But I'm not convinced one bit that we're going to be safe from this. We're 8 days out from the bank term funding program ending. And I think that's might be the ultimate bullshit that's coming in. Yes, they have a year to pay the collateral that they borrowed from the date that they borrowed it. So the first, I think, 80 billion or so, it comes due in the first few weeks of March. And again, it's not necessarily a ton of money. However, it's just another vehicle of liquidity that's just, not going to be there for these banks. And we're seeing the taper off a little bit here. That's when, as soon as we saw that kind of taper off, we saw the reverse repo drop pretty significantly. I think it went from 600 or so. I'll just pull it up right now. I'm not going to make up numbers in my fucking head. But Scotch and Stocks, thank you for being back. Good to see you here, man. Let's see. Reverse repo right here. Let's pull that up. Take a look at this here. Where am I getting the sources? I am getting the sources from from obviously TradingView here in terms of the data, but for the news and stuff like that, I'm just using Bloomberg and also Reuters. Pretty good information on those. Let's see here. And then also for like the data from some of these other ones, it's just in the earnings reports or the Fed minutes. Here we are. This is the reverse repo. So right around the bank term funding program, the time that it's right here. I think it was like right around the 14th or so. We were at about $575 billion. This is the reverse repo. Yeah, $575 billion. Then the next day, the counterparties took, I believe, $493 billion. So about a 14% drop, $82 billion that was pulled out of the system. Now, again, they're using this because there is a collateral shortage, right? They're using this because they need to get their hands on these treasuries, and then they just flip it back and they pay them back. But it allows them to pay off debts, right? So this is going to get to a point where I think we're going to see this below 500 billion fairly soon. I think today we're even lower than that. We dropped about 10 billion or so. So this is going to get really interesting the closer we get to March. But I have a funny feeling we'll probably be below, let's say the spike that we got back here in March 2020 as a 294. We'll probably be below that by the time we get to the middle of April. And again, just extremely dangerous that we have rates this high. They're not even considering cutting them. It seems like they're kind of just letting things happen. Hopefully the monetary system plays out, but I don't necessarily think they can fix it at any point. So that's that. Let me just see make sure we got to cover everything. I know we talked a lot about the bank sector, a lot about crypto right now. Not necessarily anything too crazy going on here. Let's just take a look at the indexes. Yeah, indexes are up for the time being. Small caps, just look at that real quick. Small caps are probably going to rally a little bit here. Might see a bit of a high in the Russell. And when I say high, I mean we're probably going to see something just a little bit north of this 2068 level. I'm not necessarily betting on this, but we can see that we're gapping up. There's a reason why they want this to rally. I think it's rotation of capital. Nonetheless, we're seeing a lot of money fly out of the Dow. We're also seeing, the S&P and the Nasdaq kind of flat or so, and it's just pushing up here. It's probably going to see somewhere around here, maybe 2100, but I don't necessarily think that this pattern here for the Russell is sustainable. And again, we're looking at this. If this is kind of just sideways in this parallel channel, not even a parallel channel, just a sideways channel, and we're looking at the S&P, which is doing the exact opposite, kind of tells you that, this isn't, we're not in the same market as, the major indexes. Did see something too, that I think 60% of the gains from the S&P this year have been from the top 4 stocks, which is NVDA, Microsoft, Meta, and Amazon. So it's really interesting seeing that as well. That doesn't give me a lot of hope that a lot of these companies are doing well. And again, we're looking at earnings versus, profits, corporate profits year over year. That's going to be the most important tell. We look at earnings. Anyone could beat earnings, right? I could say that Apple's going to sell 2 iPhones, and if they sell 3, fucking stock's going to rally. I mean, Apple's stock today rallied over the fact that they're cutting their division for the Apple Car. It pretty much means that they're laying people off in that division, and they're going to focus on AI. It bounced right off the 200 EMA. This thing should have broke underneath it. Funny thing is, I actually took profit right here on the 200 EMA. I was like, it's probably not going to be go down past here. They're probably going to try and hold this up. Right after I shorted it, shot all the way up to about 184. So I'm very happy I took profit. I think that's kind of the motto here, just staying solvent and making sure you have capital on hand. Because like I said, I feel like an idiot buying up here, but at the same time, I also feel like an idiot being bearish up here too, right? Keeps pushing up like crazy, but kind of have to look at the bigger picture. I think the equity market is broken. I think the sentiment about how we look at things is broken. I think people undervalue, the possibility of bad things ever happening. I also saw that, I can't remember what bank it was, but they sold a property for $1 today. It was in New York, I think. It's $1 that they sold it. They just wanted to get all this shit off their balance sheets. FSLR, any thoughts? I don't even know what that is. Let me check that real quick. So for solar, just don't tell me it's like ripping up, is it? For solar, I'm assuming this is a solar panel company. I have no idea if this is or not. I would assume, right? But yeah, I think big purchases like this, if this is a solar panel company, this is probably something that probably would make sense would go down. I don't think people are buying solar panels for their house if that's the case. But commercial, gotcha. Yeah, see, I would say, and again, I'm not even looking at the chart, but fundamentally, I would think that with commercial real estate going down and not too many offices being out there, and energy is really weird here, right? Because we have oil that seems like it's being elevated and kept up high significantly because of what's going on in in the Middle East. With a ceasefire, could oil come down? Probably. However, then you look at natural gas, and natural gas is just so cheap right now. I'm not saying it's a good buy. I'm saying that it's cheap. It seems like the commodities are telling you that there is deflation, and we're seeing demand drop faster, faster than people anticipate. Oil is probably the sticky one here. I think also Expedia laying off 1,000 people or something like that tells you that there's a lot of problems in terms of the travel industry. So I would anticipate that would also impact oil's price. Looking at this earnings today, look at expected EPS. I have no idea what's their EPS, but just look at this right here. I wouldn't be surprised if it does surge up. Right there, it seems like right now, like I said, because there's so much liquidity that's in the system, it's the last hurrah. Again, like I said, 8 days until that system ends, and then they have to start paying back debt. And you know that if they're not issuing debt, it's not a lot of money in the system. It's going to hurt them to be, buying some shit up here. But I think that a lot of the earnings season right now, it seems like there's a good chance that a lot of these things could rally up. We're currently below the 50 and the 200, so I wouldn't be surprised if we had a little run up to the 50. I wouldn't be surprised if we had a little run up to the 200, right? If we don't have that, you're probably going to be looking either at a gap down. Maybe you find some support down here around 130, maybe around 116. I don't necessarily know too much about this company, so I'd be absolutely guessing at this point. But it's going to be interesting to see. Let me see for solar EPS real quick, just before. Estimated profits. Expected 3.13, $1.32 billion revenue. What is this company worth? Market capitalization, $15.54 billion. Interesting. I don't know, man. This seems kind of like I'm not going to say an altcoin, but it definitely seems like a small cap company with commercial real estate being such a problem. I would logically think that this would be kind of shitty, but also Apple just announced that they're laying people off and people bought the damn stock. So what the fuck do I know? And I mean that in the nicest way possible. But 4,000, man, that's wild. That is wild. I don't know, man. I can't give advice on that one, but I would think it would go down, but who knows, right? Logic and reason don't work up here, unfortunately. I think that's going to be it for today, though. I'm grateful to have all you guys here. Randy, Leroy, Ace, Scotch and Stocks. Appreciate you guys always being here. Let's see, yes, options, trade on it. We'll let you know how it goes. Best of luck, man. I want everyone to be successful here. It's just very dangerous right now. Staying away from the commercial real estate, nothing but bad stuff coming for that sector. Yeah, and that's the thing too that a lot of people aren't talking about. They're talking about, oh no, it's a tech bubble. It's a tech bubble. It's not a fucking tech bubble. It's a leveraged liquidity bubble. Once they pull the leverage out of the system, no one is going to be piling money into these stocks, right? If there's no one to buy in after you bought in, the Ponzi kind of ends. Where does that take you? Probably into a market where you're probably going to get guaranteed 5% rate. It's the bond market. That's kind of what the US government wants. Powell, he's a Fed, gets paid by taxpayers. I'm pretty sure. I could be wrong, right? But I would anticipate that at the end of the day, we're looking at the growth of the United States. They're going to need money for that budget deficit. See, the biggest auction is coming in April. And the big thing is we're also getting a potential shutdown. Do I think it's going to happen? Do I think Johnson's going to let it happen? I don't know. I don't know. I don't know anymore. I don't. All I know is that the monetary system isn't called bullshit at some point sooner or later, and it's going to catch a lot of people off guard, right? It's not going to be ideal for a lot of people, but you can make a lot of money in the mania tops. The question is, can you keep it? So I'll leave it at that. Appreciate you guys for being here. We'll be back tomorrow with House and then regular time it should be. So 3 p.m. Eastern Standard. So best of luck, everyone. Good luck with that first solo trade, and we'll see you guys all next time. And again, nothing we say is financial advice. Everything I say is 100% my opinion. I just talk about stuff in the markets. I'm not telling you what to buy or sell. Do your own research, all that shit, yada, yada. Best of luck, everyone. Take care.